Good morning, Vietnam. How are we doing, baby? It is your boy Trey coming back again for another freaking juicy chicken church video. Yeah, we had a red day today. It was down 0.68%, and it is what it is. I'm going to get into the technical analysis and what I think is coming to fruition the next couple of days here. But anywho, what is up, everybody? Welcome to Trey's Trades. We freaking talk fast. Don't skip class like a purpose. I'm not a financial advisor, I'm an expert. So take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow girl again, we're going to go over a couple different things here. I want to go over the Ortex data, which is essentially a short interest sort of website in which you can track different analytics and data that is being reported by FINRA, as well as what is estimated just based on the shares on loan. We're going to go over the short sale volume percentage, that we have an idea of what sort of shorting is taking place in the market based on estimates and what is reported to these guys. Reported being the key word here, because that is the information that is made available to them. Then we're going to finish off with the technical analysis and walk you through what I think is going to come to fruition here the next couple of days, so you can make the best informed decision for yourself. Of course, that is your financial responsibility, your own financial decision. All that I ask is that you have a plan, right? Have a plan, whether it's the derivatives market or actually owning stock. I just want everybody to walk away from this making money, because that's ultimately what this movement is a piece of, right? Now, I think there's more to this, as many know. It's about saying something to the big guys on Wall Street that call us stupid money, which you can never forget. I think about that all the time. But you also have to take care of yourself financially. So without further ado, let's get into the video. So Ortex data, we actually saw an increase overall today in short interest. Now, you also might notice here that the current short interest of free float went down, and this is something that I will just straight out come out and say that I was wrong about. I thought we were going to see this go up, just because the discrepancy between the shares on loan and the short interest was still decently wide. And anytime that you see that margin start to grow, a gap between the shares on loan and the actual short interest, the trend has been that the short interest will go up and start to match that actual shares on loan. But do not fret, because the shorts have not covered their positions, and the reason that I can say that very confidently is that if you look at the free float on loan, the number didn't change, right? It's still at 105 million, or 20-ish%. The number didn't go down whatsoever. Only the short interest went down, meaning that Ortex's estimate, which is all they can really do since the FINRA report is the hard set proof based off of 85% of the exchange reported data, their estimate was just a little bit off. So you see that the actual short interest now is 16.96 based on 85% of the exchange reported data. This is a conservative estimate. It means that it could very easily be higher. It doesn't take into consideration the puts in the derivatives market, which move the stock up and down if they run in the money or out the money, or naked short selling. Failures to delivers is marked on here now, but there's a lot of different facets, as you can see, that play into the actual short interest of a stock and the things that make this move to the downside or the upside when things start going in the right direction. So choked in my spit. Holy. Oh, Teresa, what the hell is that? That was goofy. But that comes out to 86.73 million total shares, current short interest. This is the third consecutive day where the cost to borrow maximum has been over 10%. It was 11.96% today. This is an annualized interest rate that any sort of short position or share on loan has to pay if they're going to hold that share on loan or short position throughout a day or a week or a month or a year. That adds up over time, right? So that's a pretty awesome thing that you as a buyer never have to worry about. You don't have to worry about an annualized interest rate. You don't have to worry about potentially being margin call. You don't have to worry about collateral issues, right? There's a whole bunch of things that play into this. And that's actually a confirmation that this is still stepping in the right direction. The reasoning that I think the cost of borrow has gone up is just based on the fact the stock price has gone up, right? Any sort of short position has either A, started to become red, or B, lost a lot of profits, which increases the risk of any sort of share on loan or short position that is currently being lent out by a lender. Now, another thing that I like to look at is the on loan average days, and this is continuing to go up. It is currently sitting at this on loan average day, 51.55, which would move you pretty close to this $49 range, meaning that the average short position or average share on loan is about net neutral with where the stock price is currently trading. It's very damn close, meaning that you can see a quick pivot over that $50 mark, which is another critical level of resistance, which we'll get into here when we get into the charting. I think you're going to see another big move similar to what you saw at 37.50 at that $50 mark. But nonetheless, you get my point here, is the average short position is very fastly approaching some heavy losses. And I'm sure you've read some of these tweets that are floating around, but this week alone has been hundreds of millions of dollars of losses to short positions out there, which is, I'll tell you what, you could have covered at 5. You could short any stock in the freaking market. I'll tell you what, I don't short stocks. That's not my thing. But I think if you're going to, There's a million shorts out there that maybe fundamentally make sense, whatever, right? Even if this stock is fundamentally overvalued, you just gotta fucking get over it. It's been trading like this literally for months. You gotta move on, Richie. You gotta move on, buddy. But that's what you're looking at in terms of the data. So we're moving into the daily short sale volume percentage. And you can see here that the last 2 days, the 23rd and the 24th of August, which would be respectively Monday and Tuesday, you saw about 53%, 54 and 54% of the overall market volume was shorted volume. Now keep this in the back of your mind, guys. That would mean that yesterday's actual volume, over half of that was shorted volume. And nonetheless, you still saw a 20% green day, 20.34% for the upside. It left some room on the table there, right? That is phenomenal. That is phenomenal. And I think a big reason for this is very likely because you saw a lot of derivatives activity, the options market, right? Now, I think it's very important if you are going to play options that you understand how options work and all that sort of stuff, right? But there is very, very, very heavy options activity that you can see playing out here, right? There's got 11,000 total open interest here, 24,000 here, 9,000 here, 11,000 here, 29,000 at $80. There's a lot of options activity that's taking place right now at AMC, which moves volatility very heavily. Now, this is something that retail takes advantage of, but it's also something that the institutions, the firms, and the whales take advantage of, which make this so volatile. So what ended up happening at that break at $37.50 is you had a technical breakout, which brought in potentially some traders, right? But also heavy derivatives activity. You got some call options running in the money. You got a mini gamma squeeze. You got maybe some shorts that covered positions, but mostly you just built that momentum back. And the same thing could very, very easily happen at that $50 mark. And I think that's why you see that we had such heavy shorting yesterday, but nonetheless, the stock price still reflected very positively because there was so much derivatives activity. There was potential for some of these shorts, some of them to have covered positions, maybe a few million, right? But overall, guys, that's absolute stupid gorilla strength. I mean, that's nasty. So I'm pretty jacked about that. Now, to get into the technical analysis, what you actually have here, no bullshit ever, right, is a little bit of a bear trap, meaning that in the microscopic sort of terms, since these are daily candles, maybe in the next 1 or 2 days, I would not be surprised if you test, not necessarily close, somewhere down in this Fibonacci retracement zone that I pointed out to you guys in my previous video. Now, to make this very simple, this is just a 50 to 63% retracement based off of the peak of that run up to about $48.30 that we saw here in the last trading day. So if we were to pull back, I'm watching for that $42 to $40 zone, most likely the $42-ish range, where you're going to eventually get a bounce. And that bounce is going to be critical because it's going to show that overall trend continuation. Now, the beautiful thing here is we have broken out of a very, very tight trading channel, right? I talked about this in my previous video, but we were stuck in this channel here for quite a while. I mean, a continuous period of time. We had this inverse head and shoulder, shoulder neckline, broke that neckline at 37.50 and moved hard. Now we got a little bit of what I would call the fluff in the middle, where the stock price starts to do this and get comfortable in that zone until it eventually tests out that $50 mark. Now, the newest trend that we have here is just this bull trap setup where you got these two topping tails on the stock. And that means that I would not be surprised if at open you have some sort of push to the downside followed by a potential pushback up to $50. That's just based on what the trend is saying. Now, anything can happen, obviously, and the more data that you have available, the easier it is to read these sort of things. So as this continues to trade in that $40 to $50 range, you're going to be able to predict the next upcoming moves that are going to happen here with the stocks. So that's what I'm personally watching for. So watch for a potential retest of that $40 mark and then watch for a bounce back up to the mid 40s to ultimately retest what I think is going to be the $50 range sometime within the next week. I really do think I'm still short-term bullish on this. I think there's a lot of great things that are happening right now. It's getting a lot of attention. The social sentiment is going up. More eyelids are getting on the stock. This is just heading in the right direction, right? This is a beautiful step in the right direction. And it can even test $50 off this bounce, but just based off what we see right now, that is a rejection, and that's okay. It's a part of the process. It's a part of the journey. As long as you are willing to accept that and acknowledge the things that are happening in front of you, right? We have to see the stock price happening in front of us. You're going to be sitting okay. That's what I've got for this freaking video, guys. So if I can leave you with any parting words, this was said on Fox Business today, and I tweeted it out. And I think this is actually a really cool message and a good thing to be able to pass along to you guys. It was by Charles Payne. Charles Payne said this, and it was this. Do not give up on making sure you have a level playing field. I think that's huge. I really do. Remember what you're fighting for, guys. Remember what you're fighting for, because your voices are being heard, and any good change that comes in life comes with fucking noise. And so that's what I've got for you. Anywho, lights apps. Appreciate all you silly chickens and beautiful apes out there. Catch you on the next one. Much love and peace.